Hello everyone and welcome to Day Trader S&P 500. Today is January 31st, 2021. This is Dale Woodson, one of Timer Digest's top-ranked stock market timers. While I've been around trading for over 30 years, relatively new to YouTube, so we appreciate if you guys hit that subscribe button, the reminder bell, the like, the comment, and share our videos. I appreciate all of your patronage to the channel. A lot to cover, exciting week, and maybe even a more exciting week to come. Let me see if we want to get into. We had a pretty good January. Here's the trades I made. Okay, you can see 23 wins, 3 losses, 86% winning percentage. We had 3 losing trades. You can see there in the red. And while it's good, it's not as good as one I had earlier. These are the trades going back in August of 2019. I had a winning streak of 61 in a row with no losses in 2 different accounts. I can scroll here and show you guys that. We had 21,033% in that account and 18,033% in the other account. Anyway, it was a good gain, but I like to get 61 in a row or more. But it's a trader's market with these huge moves going on. Okay, so let me see. There's a lot I want to cover here. We already did that. Let's see. Let's get into the time spiral right away because that's what is big. Okay, let's go back a little bit. This is from 2006 Woodson Wave Report, where I recapped the time spiral that worked from the August 24th, 1999, what I called an orthodox high. And you can see it caught every turn, well, every high at least, for the most part, for 7 years into the year 2006. I think I may have that. Let's see here. Oh, that's our trading record for this year. My apologies. Let's see if there's our success rate with 37% for January versus a decline of 1% for the S&P. Wanted to get into that. Maybe I have that. Well, give me a minute here. There's the 06 report. Here's where we can talk about the Fibonacci time spiral and how it worked. Okay. This is what I put out to our customers, our paying customers, to our reports earlier today. Basically, it says that Fibonacci and Elliott Wave doesn't allow you necessarily to predict the future. However, in this case and in previous cases over time, I've been doing this for 30 years, it can point you or direct you to a specific period of time. In this case, it was January 24th plus 2 trading days. And then you can anticipate something to happen that they'll use as a reason the market turned up or turned down. Okay, so in this case it was for January 26th, and we're looking at the short hedge funds and the GME and the traders at Reddit coming in and buying it because it was 129% short. You guys know the whole story, and then and the fight ensues. So it's historic. It's basically a revolution. And I said here you got Wall Street bets in it. You got Melvin, Citadel, and Citron. But the time spiral pointed us to this period in time, and we're looking for an event. Okay, and this one was, as I say, an event the likes of which has never been seen before, a revolution of retail investors rising up against shorting hedge funds. We'll see how it plays out. I could talk on this for I don't know how long, but I'd rather get into the technical analysis here. Here's that chart I wanted to show you where I called the orthodox top on August 24th, 99. Of course, within 1 day of Fibonacci, 55 days later, it made a low on October 19th. And then you can see the time spiral up here and how it caught virtually every high going out to 2006. And you can see it's a weekly time spiral here. Okay, so that happened in the past, and it helped us catch at least the tops, not so much the bottoms, but it served its purpose for 7 years. So if we look at our time spiral now, and I'll get to that here in a moment. Here we go. Okay, so this is one we've been doing since September, which I thought was the orthodox top, just like back in 1999. And you can see I like to measure it by the 55 days when it made a low. That low is October 30th here. It was a 55 Fibonacci days plus 3. But you can see this spiral has caught every turn, not just the highs like the one in 99, but the highs and the lows. We had one in here. I squeezed that in there. The one on that was the 12.9. I believe it was the 89 days. It marked an intermediate high. Of course, it went to higher highs, but it pointed to the 24th of January. And the slippage you can see here, all these turn dates had a slippage of from 1 to 8 days. So far, this one's a 2, okay? And 2 days. So it pointed to the 24th. Right now, it's the high has been 2 Fibonacci days later on January 26th. It's a hard downturn from there. We haven't passed our make or break point to get confirmation, but I alerted our customers over the weekend to Woodson Wave Report that we're turning short. We actually started trading short Thursday and Friday. We extrapolate this out, and this comes into the 2021 outlook for the year that I put out. You can see the extrapolation here of 230 days. These are Fibonacci numbers, and I think we can find that. Let me see if I have that here with the, there it is. Okay, so in this case, this is those time things extrapolated out to these dates here: 9/4 of 21, 5/5 of 22. So to date, the time spiral, which pointed to, well, I put 125 because 24th was a Sunday, has won out over the price target, if you will. We'll see how this goes. I still want to allow for a move up. I'll get into that in the technical analysis of the near-term count with the S&P. But this is how that time spiral has played out. Let me see if I have that here in that's the 2006 report. Bear with me, please. So much to cover. I'm so excited I can hardly stand it. Hope you guys are too. There it is there, okay? That is the time spiral played out. Okay, right there. And boy, if I could do this a little better. All right, and there's the days, and you can see the spiral here. Okay, and it caught the what we're labeling as the wave 5 up. And there it is going into the future. So let's get right to the technical analysis. We're going to do the S&P, the usual, the gold, Tesla. I think I'm going to even throw in Gamestop, okay, because that is big, of course. And then I had a couple requests for biotech and Bitcoin. I think we'll get to those later because there's a lot to cover today, okay? So let's look here at the, this is the long term from the 1987 low. And there's a question, at least in my mind, is this 5 or is this 1 of 5 from this wave 4 low? But here's the 1987 low. We have a wave 1 up here. We have a flat correction from the 2000 high to the 2009 low. I had originally thought that these were 2 different corrections, but once I identified this triangle, triangles only happen in 4th waves. This is a perfect expanding triangle from the 2018 high to the March 2020 low. That has to be a 4. That makes that a 2. We're working backwards in time, and so that makes that the beginning of 1. Okay, so that's our long-term wave count, and if we're going to retrace this entire advance, this won't be exact to the dollar or to the point, but it'll be close. You can see our retracement levels there are 2462, 2033, and 1605. Wouldn't that be fun? Okay, let's move on. We can get, I think we're going to get to that 4th wave low here. Yeah, that are the March low. Okay, so here is the 5 waves up from the March of last year low. 1, 2, 3, 4, 5. I think in a previous video I had this 3 mislabeled over here. Okay, someone, an astute subscriber caught that. I don't have that in front of me. I'd like to give him recognition, but I don't have his name in front of me. But he caught that as like 3 was shorter than 1. Not many Elliott Wave rules, but that is one of them. But if the market is going to correct just this last 5-wave advance at a minimum, then we're looking at, and these again aren't exact to the point, but we'll get to that later. We're looking at a 382, gives us a decline to 32.31. 50% is 3,033, and a 618 is 28.34. Okay, a 382, if it's only correcting that, would be almost perfect here because it usually likes to correct to the previous 4th wave, and that's right there. So we'll see where that goes. But we don't know if it's only correcting that or more. Okay, so let's get into, I believe we'll go now into that October 30th low. Here's where this didn't play out to price, and we're still not 100% sure the top is in, although it's a really good chance. Here's one up from the previous 4th wave low. Here we're looking at this low right here, October 30th. Okay, that was a daily chart. We're on an hourly chart now. Here's that steep incline on wave 1, and then 3 just kind of dies, as you can see. Okay, and here's where it seems to have died out, and this decline here is significant from that all-time high. Okay, we have our last 5 waves up here from that January 4th low. This blue line is our make or break line. We'll get confirmation that the trend has changed when this is broken. But I want to get into a little more detail about that from this January 4th low. So we're going to a 5-minute chart. Here is that January 4th low. Here is that 5-wave advance, 1, 2, 3, 4, and 5. And you can see here where my cursor is, the wave 4 low holds above the wave 1 high. But this retracement here is steep, and it's developing in 5 waves. So I want to show you guys here what made me decide to move to a short position with our subscribers and with my trading. Okay, this has retraced more than the 618. Okay, well, let's throw in the 786 and see where that is in relation to this decline. Okay, and see, that's the thing, it's even gone past the 786. The only thing left is the make or break here, and that's I believe it's the 3662 low from January 4th. I expect that to break. Let me change the settings. I don't like to use the 786. I just want to show it as an example of why we're moving short before confirmation. Okay. Another reason is, that's the first reason, this decline is more than the 382, the 500, the 618, and even the 786. Okay, once it goes through there, then we have validation. But this decline here is 1, 2, 3, 4, 5, as you can see, and that's 1, and this is 2. Now, if this 3rd wave, let me draw this here. If this were a correction, I don't know if I can draw a trend line this way. This wouldn't be this steep. It would be a C wave like that. Okay, it'd be A, B, C. But that's not what's going on here. Okay, so you can see this is much sharper decline. So we've got, let me put my Fibonacci extensions on here. Okay, and we've got 1 and 2. See, and it hasn't even reached where 3 is equal to 1. That's why I think this is still playing out. 1, 2, 3, 4. You can see this 4th wave here is holding above the 1st wave. If it breaks above here, I think this will be a series of 1s and 2s, like 1, 2, 1, 2. But we'll see that play out. We'll probably know by Monday. But if this count is correct, then we can expect wave 3 to come down here to the 1.618 multiple of 3606. That would probably happen as early as Monday, maybe as late as Tuesday. Let me get this retracement out of the way, remove that. So that's what we're looking at there. And here is our, I'll put it back up here, our 3662 make or break level. I might not be right on it, but that's it right there. So that's what we're looking for. at a minimum, by the way, third waves can go any multiple they choose. They're usually the most powerful. It can do a 2.618, 34.67. It could do a 3.618, 33.29, or a 4, which is 32.43. We'll just have to see. I think all those are in play. We'll know. Okay. How do we know when we're wrong? Obviously, we're wrong when this high is broken. Okay, there's our confirmation, but this structure and this pullback from that 5 waves is strongly suggesting that the trend has changed to down right on our Fibonacci turn date. Let me see if I can review that. I'll do these one at a time. Let's get into the oh, here is that 15-minute bar here that we just talked about. Okay, there's the 1-4 make or break level. There's the 5 waves up, and there's the decline developing. Okay, if this is a completed 5 waves down, and that's another way to count it. That's why I wanted to bring up this 15-minute bar. We can count 1, 2, 3, 4, 5 here, and then we can expect a retracement up to these targets of 38.18, 38.02, or 37.85. So that's another way to label this decline as wave 1 down, 2 up, and then will come the all-powerful and almighty third wave down. So exciting times. What else do we have on here that I wanted to review in the S&P before we move forward? Let's see here. We've got that's the one we just did. That is our 5-minute count that I showed you earlier. Okay, that's another way to count this decline is 1 and 2 and 3 and 4 here. Okay, and then there's our targets, and it showed you how that could go to even a 2.618 and higher. Let's look at another review here. Let's go back here, the weekly. Okay, there is the wave labeling there from the 1987 low, 1 up, 2 down, 3 up, and by the way, this move up here was perfect in every Elliott Wave and Fibonacci way. It was to the penny. It was awesome. And then here was our expanding triangle 4. There's our 5. Again, it's either 1 of 5 or 5 of 5 in the entire move. And there's our retracement targets for that move down. Conversely, we can get into our other decline here, which is, that's the weekly, that's the daily. Okay, so if the market's either correcting from the March lows of last year or most likely from the 1987 lows, huge difference. But here is the decline from the March lows. You can see 5 completed waves up. There's the last 1, 2, 3, 4, 5. Okay, so we went from 2191 to 3870 in a little less than a year, about 10 months. And here's our targets for what would be wave A down. If we're just correcting this, you can see this 5 waves. It's 32.28, 30.30, and 28.32. I think that's all on the S&P. Okay, so we'll see where this goes. We'll see if we're doing something like this or more like a correction of that from the March lows. From the March lows or from the 1987 lows. Let's get into gold. Nothing's really changed on gold. This looks like obviously wave 4 again held the classic wave 3 throw under on the descending triangle with a descending top and a flat bottom. Okay, the wave 1 high held. Wave 4 went right up to it, maybe even kissed it. But we can count 5 waves up here and a decline which went right to the 786 again. So this should be a move up. Our make or break is that 17, I believe it's 65 low. Okay, we need to get above this high here, which is 1957. Wave 5 is equal to wave 1 within a couple points of the wave 3 high, which would form a double top. Otherwise, 5 up makes a 1.618 multiple at 22.73. That's our parameters. Break out above here. Support here should hold. Target up here, 2079. If not, target at 22.73. So we'll watch gold play out. This is a daily chart of gold. And exciting as Tesla. Tesla, I love Tesla. Okay, so actually this is starting to make more sense now. Again, from the October 4th wave 4 primary degree low. We have a wave 1 up. This is a new wave count, a wave 2 down. You can see 3 gained equality with 1 here, and it went above it. Again, I've been looking at triangles and trading and doing wave counts from fourth wave triangles because they're obvious. This one's an obvious contracting triangle with a descending top and an ascending bottom, and then a classic throw under again in wave E. This is a little harder to see because it's a daily chart. And we expected the thrust up out of the triangle, as Ralph Nelson Elliott always taught. But I didn't expect it to just reverse like that. The fact that it moved lower and to a new low below this fourth wave low suggests that this move is over. Okay, we could be correcting just like in the S&P. We could be correcting the last 5 wave advance or something much bigger. But this 5, it satisfies the minimum requirement by moving above the third wave. But this here is a big warning sign. Let's see what we have here for retracement levels. If Tesla is just going to retrace the last 5 wave advance, here we have a target 382 target of 702, 50% retracement at 640, and a 618 retracement at 578. Okay, and I think I may have that review of Tesla here to show you guys. Here we go. These might be off by just a little bit, but you can see Tesla went from 379 to 900 from that's just from October. That's 4 months. That's something. And what's something even more remarkable is Gamestop. Let's get into Gamestop because everyone's talking about it. The whole world is talking about it. I went to my accountant to do some tax work, and he started talking about it. And I've known him since the 90s, and we've never talked about the market, but he brought it up. So that's why I like doing Gamestop. Elliott Wave works because it's mass human psychology, so it works on the big indexes like the S&P, the Dow, and the NASDAQ. I think GameStop is definitely mass human psychology because everybody in the world is in on it or knows about it or wants to trade it. It's very dangerous. It's a highly volatile situation. And I've included the after hours, pre-market, and post-market because they're making some significant, as you can see, highs higher than in the regular trading hours. But it's moving in Elliott Waves and Fibonacci perfection. Okay, so we have a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. Now this 5 is 508, and this low is, I don't even know if I have that backed up far enough, but it's down near what, 40, 42. So that's a 5. Let's say it's January 22nd here, and this is January 28th. So that's a week, and that's basically almost 500 points in a week. And then you can see the sharp 3-wave decline, and you can see a series of 1s and 2s moving up. Okay, so where can this go? This can go unbelievably, and it's being traded on mass human psychology. And even if the people manipulate it up or down, I look at it like they're humans and they don't have a choice other than to manipulate it to Fibonacci levels and Elliott Wave extensions and retracements. So let's see what we can get here. Let's do an extension. Let's do an extension of the first wave. This isn't going to be exact because those bars are so small, but there is 1 up, and we can either count the pre-market or the real market. I'm going to count the pre-market. Might be off, but if we bring that down to the wave 2 low, 3 gains equality with 1 at 583 and a 1.618 at 873. Okay, so what do we have going on here? By the way, I'm going to get rid of this because it's going to get in the way. Okay, so we've got a 1, a 2, and a 1 and a 2. This can't be a 4, okay, because this low is lower than this high. So this thing could totally break down too, but this low would have to hold, but more importantly, this low would have to hold, okay, for this count of 1, 2, 1, 2 to remain intact. Okay, but let's assume it's correct. We'll know when it's off when this low of 197 is broken. Then game over. Game over for GameStop. But until then, it could go up into 4 digits. It could go to 1,000. Let's see here. Here's one. I'm not telling anybody to trade it because I've never seen anything so unbelievable in my life. But you can see ABC. See, that could be a perfect ABC retracement. Okay, so it could be over there. Of course, it was over here. All right, but if this count is correct, 1, 2, there's 3 equals 1. But again, that can't be a 4. So more likely it would have to go to here. So we'll extend out the lower trend here with this 1 and 2. Okay, so there's that 1 and there's that 2. So we can expect, if this is 3, to go to 461 or more likely 592. Then a 4th wave pullback above the wave 1 high, and then a 5th up. So believe it or not, anything's possible. This thing could break down and go all the way back to 40 or whatever if this low is broken. If not, look for the 3rd wave high up here at, where was that? 530 and possibly 736. And there's bigger targets all the way up here, over 1,000. But I don't want to get up there. I want to warn everybody. It's there's going to be people left holding a bag, empty bag. A lot of people. So I don't know if you want to be one of them. Just be safe. Be careful. It's a highly volatile stock, and almost anything can happen. But if they manipulate it, and they're humans, they'll have to manipulate it in Fibonacci ratios and Elliott waves. Okay, let me see if I have everything covered here. Give me a second to review. This is the most important one here. With our Fibonacci turn dates, everything is turning. I don't know if this is going to last 7 years like the other one. So far, it's caught them since September. You can see that there. Okay, so we're looking for a possible wave 2 down. Make or break is the January 25th high. Okay, otherwise we need to break through that January 4th low. Okay, let me see if there's anything else I forgot for you guys. There's our targets. There's our weekly targets, retracement from 1987. There's our daily targets, retracement from the March lows. What else do we have? There's the 5-minute. Okay, that's Tesla there. Okay, our S&P, again, the alternate count with 5 waves already being completed, the first wave down. And there's our ideal Fibonacci time and price targets. Okay, we may do a midweek update, something a little bit earlier, but until then, thank you everyone, and take care.